Hello. So I've had a little break, had a Kit Kat, and yeah, I was mumbling, a bit, but I'm just gonna go to home and show you the map. This map here, it tells you the sectors. So in general, I mean, you can see this map it would look different. So you can see this map here. Okay, it's all multicoloured. Stocks have gone up, stocks have gone down. Technology seemed to be quite a lot of red, but they all had a lot of red and a lot of green in them. So it was a very mixed day. This shows you what's not important about the main markets. So you've got to know about the main markets, be aware of them. But this is showing what's not important because some of these stocks went up, some of these stocks went down. And what were the markets doing? They were it was going up and down as well. It wasn't really, but some of these stocks went up, and some of them went down. But if the markets are terrible, like I just was talking about the SPY, on the whole, all the markets were going down, this whole thing would be bright red, it would just be red. And it gets lighter, the colour gets lighter as well. So you see MO and PM in consumer goods, they're getting to be light, but they can get lighter than that. But that means MO and PM will hit the worst. They had the worst losses. Apple went down 1.94%, but PM and MO probably went down, 4-5%. And when the markets are terrible, and the stocks go down even worse than that, this just looks like an absolute bloodbath. But it's really useful to. So this is why I have this open, because then I know where I stand. But it's the individual stocks that matter. So what I'll do, I mean that hasn't covered everything by a long shot. I say by a long shot, but also I said, all the stocks will be going down if the markets are bad. But you've got inverse stocks. You've got ETFs. So say the S&P 500 here. Look, I'll show you this. This is, people trade these. They're called inverse correlations, or bull and bear ETFs. So see, this is the SPY. There'll be an SPY bear. So you've got bull and bear, and a bear is obviously negative, and a bull is positive. A bull, the stock's going up; a bear, the stock's going down. So they'll have SPXU. See the correlated stocks here. Correlation UPRI, blah blah, whatever. But inverse correlation, SPXU, is the exact opposite of this stock. It's not, it's traded differently, but look, if you look at that, I'll go to this perf thing. So perf, you see perf? You can compare the two charts on the same chart. And there's a documentary, actually, that you should definitely watch. Okay? This is gold, right? Cool. It's called Paul Tudor Jones. So Paul Tudor Jones trading documentary, and it's the one from about 1986. It is the most sickest thing you'll ever see, and he's just doing exactly what we're doing here. But anyway, why I referred to him, why I thought of him, was because he predicted a big crash in the market, and he did this perf thing, but he did it over a period of years. So this is over the same year, but what he did, he took, the charts are moving like that. This is obviously just a normal line chart that you've probably been looking at. I never look at these line charts, I never use them. But this is correlated, so you can see that every time that the blue, which is the SPX, no, the SPY is the main market. So you can see it at the end of December, towards 2019, it was dropping there, and what was happening to the SPXU, which is the bear version, that was shooting up, and all those peaks and troughs, they all match up. So it's, it only looks like it's kind of squashed because the price movements are different. The cost of the stock is different, and obviously it's a different stock. It's traded, differently, but it's so closely related to it because it's a bear version of it. So that's that, okay. And people trade these. There's another guy. He's called Ricky Guerlito or something. If you put Ricky Trader, then you'd probably get his videos up. He's like a smooth. He's a cool, quite young as well, you know. But he's a cool talking, and he's obviously successful. But he doesn't really give you any. You know, you have to get courses off these people and give them money, which is fair enough. You know, I've given a few people some money, but I'm pretty good at talking about this stuff as well. Anyway, but okay. So what I'll do now, I'm bored. I've bored myself, so I'm going to go into a screener here. So this is FinViz. Okay, this cost me £33 a month. It's a subscription, and for that I get the stock chart. So this, you get this for free. This homepage, you can get that without having the elite version. See, I've got elite. You're logged into the elite version, obviously. So these are the only two. See, high relative, and you can't see because I've pulled down this drop down menu, my presets, and there's high relative, and then there's 5 min to 11, and those are the ones that I'm using currently, and all they are is these, you know. So price there $6 to $20, between $6 and $20. Average volume over 50,000. So that's just, you know, that's just stocks have volume and liquidity, you know, but they have a lot. Like these stocks here, you get out in and out in an instant on all of these stocks, you know. But if there was really low volume, you know, sometimes the orders don't fill, or anyway. And also the spreads get larger as well in general, so you pay more to get in and out on some stocks, and you don't. As soon as you're paying more than a cent to buy a stock per share, you know, it must be pretty damn good to warrant paying 2 cents in a spread. So you've automatically lost 4 cents per share from where you've got in. Anyway, I won't go on about that. But relative volume there. It says relative volume over 1.5. So you might look at all this other stuff, okay? You might look at these figures and think, right, okay, exchange market cap, EPS growth, dividend yield, you know, quick ratio, institutional transaction performance, return on assets, blah, 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 you know. You don't need any of it, really. You know, I have looked at that kind of type of stuff, but it doesn't mean anything because you're looking at the chart, you know. You're trading, you're taking day trades, you're playing the game. You don't need to know any about it. So let's go into an individual stock. So this is how I'm screening, okay? And this is why I'm talking about being proficient and why, you know, your proficiency in being able to spot something just by looking at a chart, you know, just by looking at it. Like I might look at HPQ at 920 there, 1920. The other things, these stocks, they always, you know, they hit 1920, 19. So for example, $19 is a level always. 1910 will be a level. 1920 will be a level. 1930, 1940, they're all levels like that. Obviously, they don't stick to them, but you can see. Look at $19 there. Look how long that stock's been hanging around $19. You know. And then when it goes up, it hits 1920, it reverses, you know, but it's broken out, actually. It's broken out from 1910. Anyway, you know, okay, let's have a look. I'll go through a stock chart. That was the screen. I'll show you the 5 minutes of them. So these are all the stocks that are making the extra moves. But then we've got this is just all the stocks between $6 and $16 with an average volume of over 200,000 shares traded per day, and that gives me how many pages? You know, these are 15-minute charts. As you know, it's got 13 pages of 50 stocks on each page. There's just so many, but you've got a 5-minute chart here, so you see the time frame there. I'll just click that 5 minutes. That means I can look at the 5-minute chart. So look what's happening in the short term. And this is where the excitement comes in. This is where the skill and you just be able to recognise something. So I'm going to look now and see if there's anything that I might have actually recognised was going to move just by the way, by one glance. So looking at this, yeah, NYCB, look where it bounced up to 13. It actually went over $13 there, but that would be a type of place you would short it. And the reason is because NYC, just looking at that, if you saw that just after 1 p.m. going up towards $13, you might think, okay, this looks like it's going to hit $13 and drop. And to be honest with you, it would have been perfectly plausible to put a short position, bet on the stock going down just after 1 p.m. there, where it hits $13 at $12.99. Obviously it spiked over it. So let's have a look at this stock. But the reason you would short that is because look how much it's dropped in the morning. I mean, it's dropped from 13.20 to 12.50. It's massive movements, and then it just goes up and up and up. And you got to look at the price action. You've got to be able to read the price action. That's one way you're reading it. That's the first sign you're seeing that it's going to reverse at 13. So it didn't reverse at 13. It reversed at about 13.04, 13.05. But I mean, that's the daily chart. So this is the daily chart of it, okay? And another thing, this stock is really high up. I mean, that was a good short there. So looking at this daily chart, so now obviously I've seen that little preview when I was looking through the chart, and it looked interesting. So I clicked on it, and then I'm just clicking into the other. So look at the daily chart here. It's really high up in September. It's, all those green candles. It's just right up there, and then it's starting to show, like a pullback. So I'm just going to go to weekly here, but it's, that 12.50 area and around $13 here is, you're looking at the way it's moved before as well. So at the start of 2019 there, it went right up, then it went right down to 9.50. Now it's gone right up there, but I'm trading very short term. This is a weekly chart. So you have to be able to understand, what this daily chart is telling you, and in general, how stocks move as well, because this is a daily chart, okay? And remember, at the start of the video, I drew a diagonal line down, didn't I, on that stock, and said that's a very typical thing for a stock to do, and it's called a breakout. It's called a breakout, and people trade them. Many skillful traders make money over and over and over again trading these types of stocks, but it feels unnatural. It feels unnatural to buy up at 11. What's that? Let's have a look. 1170 or something like that. It doesn't feel right to buy up here, 1170. But even though that is where it started to shoot up, and it started to shoot up there because look, it's the same as the other pattern. It broke out of that diagonal line down. So that diagonal line coming down there, it broke out of that. And that's on a daily chart. But it'll do that on a daily chart. It'll do that on a 3-minute chart. And that's what I was showing you. That's the mad thing, is that at the start of the video, I was showing you a 3-minute chart. And it was doing it on a 3-minute chart. And this is a daily chart. And it's doing it on the same thing. It's breaking out like that. But anyway, when you see stocks doing, that have just moved up really high, it's a good opportunity up here. Really good to take a short of $13. It was a really good opportunity because it's already started to show a bit of reversal. So these are daily candles. Obviously, at the start of the day it was at that price. At the end of the day it was at whatever price. That green candle, third candle towards the end. It opened at 12.85 or whatever. I haven't got that exactly right. And then it closed at the end of the day at 13.12. But then the next day it had a little bit of, it wasn't another green candle. It was kind of an indecision candle. It closed and opened at the same spot, so it started showing. And that's why this day, the previous day with the red candle there, had such a big movement down, because it, people started to feel that it was due a pullback. If okay, it might not drop down to $12, but stocks pull back. They go up, they pull back. They go up, they pull back. And it was a very good trade, and it was an accurate one. So normally, okay, I've been getting stung from this quite a lot recently, but I haven't been trading my best, you know. But you see September the 13th there. I'm going to move it along a bit there. I forgot what I was talking about. Oh yeah, you see where it spiked up to? It spiked up to 1304. September 13th, when it went up, you know, it dropped in the morning. It just dropped. So the day before, it had gone right up to 1340. You know, and look, you can see. Sorry. Okay, so just looking at 1250. You see what on the 13th of September it dropped down to 1250. I was just wondering if 1250 was a particular level. It's a round number, but it's not necessarily a particular level on this chart at all. It's not a level on this chart, 1250. I mean, that's just been going up ridiculously. You know, it's mad. Look at the way it's been going up. And you see those lines on the chart. People talk about those a lot, moving averages, okay? And people use a lot of indicators. And they even try and sell you it. All they're trying to do, there's this one video that you see, and I've been watching it for months and months and months. He goes, so if you're a trader, you're losing a lot of money, you know, and then they show you this indicator that does it all for you. And all it does is draws a couple of lines on the chart. It's ridiculously so simple. These moving averages, people... Okay, so let me explain these moving averages. You know, I tend not really to make too much... I don't really use them personally. You know, I'm looking at the levels on the charts and I'm drawing diagonal lines, you know, like the breakouts that I showed you. You know, I showed you those, you know, the logic of those charts I was looking at a minute ago. But obviously, you know, people talk about these moving averages, and all they are, the moving averages are a Western invention, okay? So the candlesticks are a Chinese invention, the moving averages are a Western invention. But all they are is an equation, you know? It's just that price action is just pulling that line, mathematical line, you know, from... So it's just and the other thing as well, down here you see this RSI, that's called a relative strength index. It's very simple, yeah. It's just saying, you see it's all purple like that, that means it's overbought, it's overbought, it's overbought, you know. Anyway, those are indicators and moving averages, but I really don't pay too much attention to them. But anyway, you can do what you want, you know. But okay, I'm getting frustrated now because I'm going off topic and being stupid. September 13th. Okay, in general, I want to put if I really think it's going to go down at $13, I've got to put a stop loss at 13.06. So if I'd have shorted it at 12.99, I probably would have put I would have put a stop loss at 13.06, because you want to it might spike if you short it at I mean, to be honest with you, especially this stock might have well just hit 13 and not even gone to 13.01. You know, I'm talking about, you might have said, oh, well, bugger it, I'm just going to short it at 12.99 and put a stop loss at 13.01. But you lose 5 cents per share if you do that and lose, because even though it's 2 cents, 2.99 to 13.01, you're paying 3 cents per share in fees. So you're losing 5 cents per share. But anyway, if you put it at, obviously, if you put it at 13.06, you're losing 9 cents per share if it fails. Wait, 13.06 to... or 10 cents, whatever. But it's quite a chunk. But look, this is the kind of stock that once you short it at $13, it might not go back. It might not go above $13 for weeks, you know? it's just shown this big drop, and $13 is high up, you know. And look what it did in the morning on these windows. I mean, even, actually, the fact that it went back up to 13 is showing that, you know, there's upward stuff going on there too. But if you look at the daily chart, it just looks like it's going to come down, you know. I mean, I don't know what's happened. So you, obviously, you want to know what's happened with the stock, and you can know, especially with FinViz so good, you know. There's the RSI again, and that's just, you know, another mathematical thing that they do, which shows the peaks and troughs and kind of equalizes them out. I do know what it does, but I'm not, you know, I'm not a scientist. Not that you really have to be a scientist. It's very simple, but so okay, let's look down it. So looking at this, yeah, you think, well, what the hell is that, you know? And there's a few things that you look on here, but you see this column here, shares outstanding. That's the only column that I personally look at, and to day trade, look at the charts. That's all you need, you know, this column here. So I'll go through that in a second. Most of the time, I'm not really looking at this anyway. Sometimes I probably wouldn't even look at it throughout the whole trade. You know, I wouldn't even look at it quite easily. But so if you look at all this like insider transactions, I just, you know, it's very difficult to be able to make any sense of it. EPS this year minus, you know, earnings per share, EPS is, sales, you know, quarter over quarter earnings per share. I mean, you've got debt equity, you know, income market cap 6.14 billion, you know. But it doesn't mean anything because this stock is just bouncing up and down, you know, and you're trying to make money from it. And, you know, what does any of that relate to hitting $13 and then reversing off $13? Any of these statistics don't mean anything with regard to the chart reading. You know, it's a ninja, you know, it's a computer game. And it's fun and exciting, you know, it's not laborious. Or should I say, it's not labour intensive. You know, it's about your enthusiasm and spirit and your, you know, your hawk hunting eyes. Look, September the 5th, 6 safe dividend stocks to buy now, September the 5th. So when was that? So it's got a little news feed down there. So I'm going to tell you about the news now. So the news here is very self-explanatory. So 5th of September, wasn't it, that bit of news saying this is a great stock? And wow, look, they were right. You know, it might have already been 5th of September. I don't know which candle that is, that green candle, the 5th of September, because there's weekends as well. So that it's not necessarily the first candle is, you know, Monday the 1st of September. You know, it might be Monday the 3rd of September. But anyway, on the 5th of September, that bit of news came out. You know, but obviously there was something else going on with the stock, and that will be in the news feed as well. But really, all you need is headlines. I never, personally, I never read any of the, you know, I never go into it. Okay, another important thing is earnings. Okay, August 5th, edited transcript of NYCB earnings. Every single stock has edited transcript of earnings conference call or presentation. You know, they've got to release their figures at specific time for each stock, and they come in clusters. Like, you know, it'll be earnings season. I don't know what time of the year earnings season is there, but obviously I'm going to show you about Market Watch in a second as well, to give you a view about the, you know, cool stuff, some of the other cool news stuff that you look at, you know, to get a feel for what's happening in the day. And also the futures as well. You'll hear futures mentioned a lot, and that means people are betting on what's going to happen in the future of the market, you know. So they can say, everyone thinks it's going to be a good day today. Everyone thinks it's going to be a bad day because that's what they've betted on. They've betted that it's going to be a bad day. And that's a good you know, that's a good way to know what's going to happen in the future. That's what they call them, futures, I guess. So, okay, this news here. So September the 3rd, New York Blood declares a quarterly cash dividend on its preferred stock. It's saying it declares a quarterly cash dividend, so it looks like it's introducing a dividend, you know, introducing a payment to its shareholders that wasn't there before. September the 3rd, you know. So now we know, you know, it went up. But sometimes you don't know how good the news is. That's another thing as well. So you look at found a cure for cancer, which actually happened to me once. A stock, you know, said the news came out, they've announced a cure, you know, and the stock didn't even move. It didn't even move at all. I was like, what? So, you know, to be honest with you, if you're going to learn how to trade, you've got to look at the markets every single day and figure it out for yourself, you know. But I think a good philosophy is the objective is money, you know. So if you're diving off and around looking at other stuff, it's fair enough, but if your goal is to make money and become a successful day trader, you know, it's another thing. My broker, I can't hold stocks overnight, and I don't want to hold stocks overnight at all, because I want the least risk possible, you know. And overnight stuff can happen. In the morning, if you have to sell your stock, but it's gapped down, because obviously stocks can gap up and down overnight. You know, you can ensure that you're never in that position by never holding a stock overnight. Obviously, you know, all these people are holding the stocks overnight. Otherwise, every day, you know. But I'm just saying that's a day trading strategy, you know, and it means you can, when you finish your trading day, it's over. You're not, and I'm telling you, if you've got a stock and you're holding it overnight or holding it for a certain amount of time, you know, it's not about like day trading. You know, you're getting in and out of a stock within 10 minutes, an hour. In this case, say short at $13, okay, and put a stop loss at 13.06 because, you know, that's a logical place to put a stop loss. You know, if it's it might go up to 30. Anyway, it's a logical place to put a stop loss, okay, if you're shorting at $13. So say you know, what would have been your target? Because that's important to think about as well, you know. You don't know what's going to happen. You don't know how far it's going to drop. You might think it might keep going up, but personally, I mean, it looks really bad. I mean, just after 2 p.m. there, 2:30 p.m., it just, you know, from 1:30 p.m. to 2:30 p.m., it just all red candles. It's just no buying pressure. It was just dropping. You know, in the way it was dropping, it was, you know, look when it was going up from 12 p.m. to 12:30 p.m. It was just going up. So, yeah, but the reason it reversed at 13 is because 13 is such a strong level, you know, and it already had that massive drop in the morning. Why is it suddenly just going to start shooting up? You know, anyway, it's not the best, you know, a lot of the stocks, they will reverse. They'll hit 13, they won't even... It's not the prettiest chart, this, at all. It's not the prettiest chart. So, anyway, I'm going to leave this as that, because it's quite long. But I hope you got something out of that, and, yeah, good luck, and look out for updates in the future.